Hey, good morning. So we're here on market is 2 minutes from opening. We're here on 926. Yesterday, we can see we are opening up right here at the lowest point from 2 days ago. We'll see where we're gonna go from here. We've been kind of had about 3 down days this week, and if we look at the SPY, let me pull that up to the front. If we take a look at the SPY, we can see that there are some technical reasons why we did bounce at the spot we bounced yesterday. First off, there was a low. There's a moving average. The 21 also bounced off the expected move yesterday. Does that mean we're going to go higher? Who the heck knows? We're just gonna play this, see what happens. We can possibly get into a lower risk SPY trade after the market opens sometime. We'll just see what's going on with the way things are going. Let's see. There was some inflation data that was released. The core PCE. Let me see if I can switch to that. Let's see. Here we go. We'll put that in the front. See that the core PCE index came in unchanged. The market did rally a little bit off of that. And, let's go ahead and let's get you back on the 15-minute motive wave here, so we can take a look. Okay, we are open, and let's see where we start. Go right there. I know it's a little bit tough to see that candle right in here. This is where we are. So that is the spot. This has served us as some resistance so far this morning. First initial move is down. We're going to take a look at some SPY trades. So coming soon to a market near you, we are going to pattern day trading is going to be cut off at $25,000, which means we are coming down. That's a pretty sharp move down. So what does that mean? It's going to be that day trading is going to be available to a lot more people. This could be a good thing. This could be a bad thing, depending on who you are. So let us see here. Okay. It is a little bit, that's weird. There's a little bit of a divergence here in between what the SPX is doing and what the futures are doing. That is weird. Okay. Okay, there the futures have gone up. The futures have caught up. They are going up. And so is the SPX. Okay, so we're going to go ahead. We're going to take a look at a long trade. And let's say that our anticipation is that the market does go up from here and it revisits the highs next week. Okay, here, hold on one second. We are at the low of 2 days ago. Very violent moves here in the market today so far. Wow. I mean, we are 2 minutes in, and this opening candle is already at a range of 15 points. 2 minutes in. Okay. Wow. Unbelievable. So we opened up, we sold off 5 points, and then has been rallying up. $20-point range on that candle now. Let's see. So we're going to be headed into 2 days ago's value area. Okay. All right. $66.35. Let me just see what happens. So we sold a put in the SPX here. Made a huge run up. So we sold the 66.85 call. We got 72 cents for it. So there's a pretty huge opening run, of course, and kind of slowed down a little bit. Now this could not work whatsoever. It does look like we might continue to go up, and I'm going to go ahead and get this put ready to go. I'm going to go ahead and sell a put here. We'll see. Yeah, because it looks like we are still going to run. That was just a one thrust up to the R4 level. We will see. Let us take a look at what our Let's see, where is, here it is. Yeah. Refresh this. So we can see on that run up, we did get quite a bit of premium expansions. Let's see. Okay, premiums are backing off a little bit. Let's see what happens here. Right now we are up about 30 points off of yesterday's close in the SPX. Yeah, and it does look like it wants to run higher here. We're going to get a, what's that called, a Vanna rally, where implied volatilities come out. Of course, implied volatilities weren't that big. You know, VIX, it only went up to like 17, I believe. Let me take a look at this chart here. $17.74. And even during the sell-off yesterday, it's interesting. Let me pull that thinkorswim up here. So yesterday we had a huge sell-off, but like we can see the VIX only went to 1774 and then sold off. Never reached new highs again, even when the market was making new lows. That's a pretty decent indication that, you know, option players weren't in that move, and there was a lot of option selling going on into that move, which means that there was a lot of people did not trust what was going on yesterday during this sell-off here in the morning, and actually in the afternoon there was a lot less trust because the VIX didn't spike. You see, we made new lows in the actual market, but the VIX did not make new lows. So everything is up today. So let's see, if we want to go ahead and we want to get long, let's think of different ways we can do this. Let's say we have got $2,500. Now let's do $250. What is the most efficient way to play that? Like how many long deltas can we buy? let's see. And as soon as I get into what I want to talk about, we're getting we get pretty decent moves. Okay, we're gonna go ahead and enter. Okay. Now let's ask ourselves, was that a fake out? If we come back into that range, that was a fake out, and we could be going lower. Okay. So let's say we have $2,500 account. Let's say we have, yeah, I don't really like what we're doing here. All right, let's see. Moment of truth. Do we come back in? We come back in. Let's see, because we broke out. Yeah. Yeah, I'm not a fan of that. Mm-mm. Let us see. All right. We're into that range right now. My thought is that all these people that bought on this up thrust now are going to have to sell. We're going to be going lower here. And let's go ahead. Let's take a short. And take a short right there. Yep. Mm. Okay. No, that was just a buy the dip moment, huh? Okay, now we're gonna get people that got long there or they got short right there. We're gonna be buying here. Oh my gosh, what a friggin' mess. Okay. Mm. All right. Let's see what happens. Okay, so we got a fake out to the upside, then a fake out to the downside. Well, this could be interesting. Oh my gosh, a double fake out, man. Wow, that's brutal. Wow, the manipulation is high today, man. Double fakes. Hmm. Yeah, here we go. Wow. All breakouts are being sold here. All breakouts and breakdowns are being sold, or being reversed on here. See if this one gets bought. You got to do breathing exercises, you know. Let's see. Yeah, I mean, we can see. I mean, that's off yesterday's lows. I mean, that's quite a move. I mean, yesterday's low, we're looking at 66.24. And it's a 70-point move off of yesterday's lows. Okay. Yeah. Okay, well, let's talk about. This is going to continue to. Wow, and it break down again. Break down again. Puts are being bought here. Puts are definitely being bought. We got, you know. See, call premiums are not expanding. Put premiums are expanding. Okay, let us see. All right, let us see. Okay. Well, let's get into a little bit of content. Let's say we want to get some negative deltas. What's the best way to do that? So, say you have $2,500 and you want to buy the SPY. Let's say you want to sell the SPY. I'm going to need to move my face out of here. Okay. So, you want to sell the SPY. You want to get some negative deltas. So let's just say we go ahead and we buy, or we sell short 100 shares of SPY. What's the cost of this going to be? $85,980 to make that call, to make that play. So if we're saying 100 shares times 661, well, it's 66,000. But shorting is going to cause, depending on your broker, is going to cause possible more margin impacts. Okay. So let's go ahead and let's analyze getting these same amount. So this is going to give you 100 negative deltas. And that's what we're trying to achieve. What's the cheapest way to get 100 negative deltas? So let's say we go to let's say we want to go ahead and let's buy a negative delta option. At the 100 delta, the closest 100 delta negative option, it's going to cost you $3,400. Let's analyze that. So we're buying this single option right here, $3,400. And problem is that we're going to have a little bit of theta decay, $3,400, and that's going to give you 100 negative deltas in essence. So you can see that's a lot cheaper than the 66,100. Price of that, but of course this has its cost because this has no negative theta, which is no negative time decay. This does. If at expiration, you're basically going to have 160. You're gonna need to be down $1.62 over this position. So now, what happens if we go to a spread? Now, let's say we buy this sixth, and let's do a 10-point wide. Okay, so that's going to cost you $275 to do this spread. That's going to give you 15 negative deltas. How many do we do to get to 100? Okay, so there's 106, costs us 7. So this is going to be a total debit outlay of $1,904. That's going to be cheaper yet. Again, this one is going to have some negative theta cost to it. Actually, it's telling us it's positive theta at the very moment. This one's going to have a maximum of the profit that you can make at $5,000. These have no maximum profits. But this vertical, let's take a look at where this vertical becomes its max value at 650. So if SPY goes down to 650, well, these singles, where do you have to go to make $5,000? In order to make $5,000, this SPY has to go down to 610. Pretty much same with this one. But with this one, it's cheaper. This one only has to go down 10 points. It's where you're at max profit. So you can see the so the negative deltas are greater with this one. But one thing that happens is we have the second order Greeks that are in play, which as time goes by and the difference in where we are priced changes these Greeks pretty rapidly. So let's see. Let's see. Okay, so what are these Greeks called? So charm is going to be how your delta changes as time goes by. So let's take a look at this here. If we go to, all right, if we go to our delta as our metric here, let's go ahead and let's just do like a 4-day step. Okay, so this is going to give us negative delta, which is obvious. We can see that here, these are negative numbers. And this position delta is basically going to change as the stock goes down and as time goes by. We can see here that you see where we are here now is we're at minus 100 deltas. Let's say we stay right here. We're basically just by time going over the next week, so October 2nd, the position delta, if we just stay here, is going to get more negative just by the way the time is time moving. Basically, that position gets more negative delta. And then in 2 weeks, that position delta is going to get even more negative delta. We're going to go all the way up to 155 if we just stay here. And then all the way down to the in 3 weeks away on October 16th, we can see we're going to even get more negative deltas. The delta number is actually going to get more negative the longer that we're in this trade. And that's what charm shows us. Okay. Let's see how we are doing in the market. Looks like we broke out just a little bit. Okay. And then one thing that also happens is our gamma is going to get more negative too. Or it's like, because like let's say if the market continues to go down we're going to get more negative deltas. Here's our position here. Let's say the market goes down and drops 16 points today. This is where our deltas are going to get as negative as they can get. Just by the market going down, it's going to bring us more negative deltas. Right now we are at 108 negative deltas with this position. We would be at 135 deltas if this goes down. Now deltas start to get more positive. That is what gamma shows us. Okay. Okay. Don't like that. Let's see. Okay. Where are we at here? What is, let's see, let's take a look at that 15 minute. And let's see how far we go down here. If this is just a pullback, or if we start to really rock us to the downside here, which is definitely a possibility. I'm going to go ahead. Let's see if we can get more calls. Okay. Amen to that, man. Okay. Yeah, here we go lower. Here starts the roller coaster. Here starts the roller coaster ride. Yeah, here we go. We're going to go down quickly here, I believe. Okay, so here is, we are at that line. Nah, dude. Wow. Very quickly, very quickly. Hit that line and then poke through it, then reverse back up, man. Dude, come on. Come on. Wow, we are just getting 30-point moves in 5-minute periods. Tough market to be a premium seller on short term. Yeah. Yeah. How big is that order down there? 66, 65. It's only 172. The order book is so thin, it's able to cut through these orders like nothing here. Yesterday's high again, low of the day. I'm going to go ahead. We're going to go and buy it back there at 66.67.50. Just any sort of selling is able to cut through these orders. It's actually pretty daggum, pretty silly, man. Go make another cup of coffee. We're definitely running away from value here. And if we look at this, like this is a minute. 678. Freaking want to buy it. Dude. Wing. All right, so we did take profit on a short futures trade. Still continuing lower. Quite a bit of bearish downside activities. And that's nearly a 50-point move from the highs. 45-point move right now. We're looking at a 50-point move if we go to 6,600. I mean, it is pretty daggum. it is. I mean, and that is in. That was a 10 o'clock candle. We haven't even hit 10:30 yet. In 26 minutes. In 26 minutes, that's where we hit it. Pretty daggum amazing, man. Pretty daggum amazing working movement. Let's see this one here. 67.03. Low of that candle, 66.57. So 44-point move to the downside in less than a half hour. All right, well, let's see. What are we looking at? So why a thin order book is important. Let's talk about this. Let's see if we can do motive wave. Let's get you on the right screen here. Must be in this one. There it is. Okay. So thick order book means that there's going to be a lot of orders right in this region. See, these let me go take a step back. These are all resting limit orders. Okay? Resting limit orders. These are resting buy orders, these are resting sell orders. So as the market moves through these orders, however many orders there are will determine how easy the market can move through them. If there's a lot of orders here, like, or if these orders are bigger in size, it's harder for the market to cut through. If they're smaller in size, they're easier to cut through. So on days where you can see order book where consistently these numbers are above 100, we get less movement because the orders are harder to move through. It basically it takes more. It takes more. It takes more market orders, aggressive buyers and sellers to move these. Whereas when you have thinner orders, it takes less of those types of traders. So today I would consider this a thin order book. It's yeah, it's thin. You know, I mean, they can be up around 100. You know, if they're above 200, the market's not going to move. The order book has gotten quite a bit thinner over the years. You know, Fat Cat talks about that. Check out him; he's good. Fat Cat. Anyways, so thinner order book, greater market movement. Thicker order book, less market movement. So you got to know. That's one of the things you can tell, you know, from looking at the level too. I can't show that for very long, though. I know that it is. They don't want you streaming that stuff. They don't want you streaming the order book. You pay so much for that data, you know. So it looks like gold and silver are running again. Let's take a look at those. Let's go ahead and let's take a look at what gold and silver is doing. Just going to put this on the 4-hour chart. Let's go ahead and put that one there. Okay, there's your 4-hour chart. Let's see what gold. Gold is doing. Oh yeah, look at that. Look at that here. That just happened. This just happened. We were up here in this region, but gold is continuing to run. Let's take a look at what silver did here too. Probably the same thing. Yep. Silver. Wow, all-time highs on silver now. Yeah. So I'm short the 80 call. It's 80 call, 88 days to expiration. I'd show you that on Thinkorswim, but they don't have like Thinkorswim doesn't go out to 88 days. It's weird. Let me show you. I'm going to show you on Thinkorswim's options chain here. And I wish that we could, let's pull up the silver futures, SI. And look at, oh, they just got it. Okay. I guess it's 90 days is going to be the cutoff. I'm going to show you the position I have in silver. So I've got the 80 call that I am short. And I got that one for 0.7. 0.07. And then on the put side, I believe I've got the 34.25. And I did that one for 0.7 as well. So we're going to look at this. Let's go ahead and we'll take a look at the P&L open. And let's go ahead and do expiration. So, lots of wide. That's very wide up here to the top, you see. I mean, silver essentially would have to double in price for that to be in the money. Okay, I'm going to go ahead and take a long here in ES real quick. Let me get this. I mean, well, let's just see. Let's take it. We're going to go ahead and take a long here. Looks like it wants to go higher. Now, just some choppy frickin' madness here today. Extreme chop. Price is like a friggin' roller coaster the last few days. Absolutely obscene, the price movement. Yeah, let's go back to silver. So we can analyze this position here. So what we're saying here is futures are going to be a little bit different than stocks in that each move is basically a tick. Okay. Okay. So each so the price is based on what we call ticks. So I mean, so if we pull up the silver futures here, Thinkorswim's going to give us quite a bit of information in these. So this is going to be your tick size, 0.005, and each tick is going to be worth $25. Okay. So if we pull up a chart of silver, let's go back over here. And what we're going to look at is, let's put it on, like, say, 15. We got a silver chart. Shorter time frame. Well, 15 minutes. Okay. So we'll zoom in on this. So let's say we buy the low tick of the day. Completely unrealistic. And the high of the day is 46.04. Okay. So let's get that number out. Actually, we can come over here. We'll bring up this calculator in Thinkorswim. Let's go ahead and switch the gadget. And we're going to do calculator. Okay. What had happened there? Why did it switch over to the bonds? Okay. I got to tell you, this price action is so freaking annoying, man. So freaking annoying, dude. So 46.04 minus the low of the day. We're going to just pretend we bought the low of the day. 45,292. 45.292. That's going to equal 0.74. So we come back up here and we say, okay, what's the tick size? Or the tick size is 0.005. So we need to divide this by 0.005. So that's going to give us the amount of ticks, right? It's going to give us the amount of ticks that have taken place, 149.26 ticks. So what we want to do then is we want to say, what's a tick value? 25 bucks. So we'll times this now by $25. That's a $3,739 move up in silver right there. So that's how you figure out the tick size of the futures, or how much moves are worth, at least. I mean, as you can see, each tick is 0.005, and we made a move of, what is that? Yeah. That's just one contract of silver. So if we come back here to our analyze, let's shut that down. So our max profit is going to be $700. We got 0.7 on each side. So that's going to be $700 is going to be our max profit. And so you can say, hey, we're at the money here. Why is this side so much farther on the call side if you got both premium, if you got equal amounts of premium on both sides? It's called skew. This is what is called skew, meaning that the risk, like let's say risk of World War III, is going to what's that going to do to the price? Well, of silver. Well, silver's going to go up if a massive event. It's like if you take a look at the stock market, a lot of the risk is going to be to the put premiums are going to be further away from where at the money is. I mean, because options are inherently insurance, and so that's going to be the reason that if the further you get away from the market to the downside, like the options will get cheaper, but they're more expensive to the put side because we're pricing risk. Let's take a look if we do run a simulation here let's go ahead and add simulated trades at 30 days to expiration. Let's just do, we'll do this 31. So let's go ahead and we're going to try to sell, just try to get 10 bucks, okay, on each side in the SPX. Let's get 10 bucks on the call side. Okay. So if we take a look at this, what's closer to the money? Well, what's closer to the money is going to be to the call side, because options are inherently insurance. You can see that this is where a risk of a cataclysmic event is going to make the market go down. It's going to make the stock market go down, whereas it will make gold and silver go up. Okay. That's how you can tell where market risk is priced. Just go ahead and sell same size options that you're going to get the same credit for, and see where see which one's further away from the money. Like, okay, we're at 6,600. That $10 option was up here at 69 for the call. To the downside, it was 59.80. Call it 6. It is twice as far, basically. 300 points to the upside, 600 points to the downside, twice as far. That's because that's where risk is priced at. Now, in implied volatility events, well, that's going to get further down too, because options are going to get more expensive. Wow. Okay. So let's do some analysis. We're going to go ahead. So anyways, let's go back to the silver. This is our trade in silver. Right here. So the delta is going to change as far as what happens with implied volatility and movements. We're going to make, right now we're saying we're going to make 28 bucks a day from that position. We'll see what happens. Of course, IV is up on silver right now. If we take a look at our am I long something here? What am I? Oh, I am. I wasn't even paying any daggum attention to that. Wow. Anyways. Okay. Well. Look at these lines. I don't know if it means anything. Same motive wait 15 minutes. So we look at this. These little wicks right there. Hasn't really spent much time in this area. I guess I better. I think we're going lower. This is a good opportunity to get out. Make sure we don't have anything. We lost some money in our prop account today. That's okay. I'm gonna go take my daughter to the dentist. Um, you guys have a good day. Market's kind of tough for premium sellers, but that's okay. I don't know. You all have a good day. I gotta